21. The following scenario relates to question 61, 67 to 71. That's okay. A company is a publicly listed company. Details of Advent company's non-current assets on 1st October 2018 is this. So we have land and building, plant, telecommunications license, total. Let's write it down. Land and building. Then there is plant. There is telecommunications license. I will call it telecommunications license. And then there is total land and building. And then there is cost or valuation they are saying. Then there is accumulated depreciation or amortization. And then we have carrying amount. All right. And these facts are on the date 1st October 2018. All right. So land and building 280, mm, depreciation 40, and then carrying amount is how much? 240. Plant 150 is the cost, 103 is the depreciation, 47, 130, 103, 150. So it should be 47. How come they're saying 45? So either this depreciation amount should be 105 or they should be 47. Not sure. Let's keep it 105. Maybe it's a typing mistake or I'm not following it correctly. Telecommunications license cost is 300 and then amortization is 30 and 270 is this. So the total is how much? 240 plus 45. This 255 triple five. All right. All right. So looks like this is 105 only. Now they have this, the following information is relevant. Okay. So in the first this thing, what are they saying? The land and building were revalued on 1st October 13. So on 1st October 13, they did revaluation of what? Land and building. So we can say land and building revalued at 200 million to the building. Oh, okay. 80 million attributable to the land. So they did on this date, they did revaluation. Okay. So there is land and then there is building. 80 million attributable to the land and 200 million to the building. All right. At that date, the estimated remaining life of the building was 25 years. Okay. A further evaluation was not needed until 1st October 18. So again, on 1st October 18, they again revalued it, hmm, when the land and building were valued at 85 million. Okay. Or maybe you know what, we can keep this date this way, and probably we can keep this date here, maybe here. And let's delete this, keep it this way that on 1st October 18 they revalued it to 85 million and then 180 million. Okay. The remaining estimated useful life of building at this date was 20 years. Okay. All right. In the second pointer, what they are saying, plant is depreciated at 20% per annum. Plant depreciated at 20% per annum. All right. On cost with time apportionment where appropriate. Hmm. What does that mean? We'll see. On 1st April, on 1st April 19, new plant costing $45 million was acquired. Okay, so 45 million, I will say. So cost of new plant on this date is 45 million. In addition, so they are saying plant is depreciated at 20% per annum. On 1st April 19, they acquired new plant for $45 million. In addition, this plant cost $5 million to install and commission. So there are some direct costs associated to it, which is related to like what is that? Installation and commission, which is 5 million. No plant is more than 4 years old. Not sure if that fact is relevant. Uh, okay, I think that's they're saying because on 1st April 19 this took place and the information is it. Not sure why they're giving it. But yeah, let's continue reading it and gathering the facts. So we'll see how relevant these things are in the question. The telecommunications license was bought from the government on 1st October 17. Telecommunications license was bought from the government and has a 10-year life. Okay, it has a 10-year life. It is amortized on a straight line basis. All right, SLM in September 19. Okay, what happened in September 19? A review of the sales of the products related to the license showed them to be very disappointing. Impairment. As a result of this review, the estimated recoverable amount of the license at 30th September, okay, 30th September 19. Hmm, what happened on 30th September 19? It was estimated to be 100 million only, this license. So what we gathered here is the carrying amount was for this license 270 and they are saying it is now 100 million only on 19. So we will calculate this amortization for this period like on 1st October they are giving and this is September 19. So for 1 year, the depreciation will be, amortization will be something, then we will deduct and then we will see how much is the impairment. Maybe that will be the ask from the question, but these are the facts that are given. And we will now use these facts while solving all of these questions. I am reading it slowly, doing like a student to see if it is doable in the laziest way possible in 18 minutes time because 18 minutes is the time given to answer all of this. So what is the carrying amount of the land and building at 30th September 19? Hmm? Land and building 30th September 19. All right. They're asking what? Carrying amount. All right. So I think we should bring this here. This was on what date? Hmm? This is land and building data. This was 1st October 18 and they are asking how much is on 30th September 19. I mean at year end how much it will be. So we have these facts. Are they talking about something else? It is just plant and land and building. Okay, so they are saying that on 1st October 13 there was revaluation and 1st October 18 also there is revaluation. Oh wow. So the combined this thing is 265. So we will take this data, when revaluation happened and on this date we will take land and building at 85 and 180. So the sum of these two are 265. So we will take this 265 as beginning balance and amortize this over 20 years. So maybe not this data. We will say that okay, on 1st October 18, after the impairment analysis, you said that my land is 85, building is 180, so 265, and then it is 20 years, So we will depreciate it over 20 years, so it will be like 13.25. Uh, you know, hmm. So now, how much will be this thing? It is coming. Oh, one second. Which I think we need to break it like land and building. So land is how much they are saying? Land is 85 and building is 85. So there will be no depreciation here, and here it will be like 20. This will be the depreciation. So our value should be how much? 256. First will be the answer. Earlier mistakenly I took land and building both to calculate the depreciation. On land we will have no depreciation. On building we will calculate it over 20 years. So 9 will be this for the year. So we need to calculate these things separately, and 256 will be our answer. Okay. Now let's see what question number 68 is saying. What is the depreciation charge on the plant? So now they're talking about the plant 68. So what information we already gather about this plant is, oh yeah, plant depreciated, all of this we calculated. So let's bring it here for a moment. So what we gathered is, plant is depreciated at this 20% per annum, and cost of the new plant is 45 million and 5. So 1st April 19 they acquired it, and they're asking on what date? 30th. So they're asking that on 30th September 19, So it is just 6 months. Okay. So the total we will take because, we have acquired this plant and there are direct costs related to installation and other things. So these are direct costs. So we will take like 50 million, and depreciate 20% per annum. So how much will be our depreciation? 50 million multiplied by 20%. So our depreciation on this will be 10. But it is valued at 50 million, right? Because 45 million is the cost of new plant, and what is the depreciation for the plant? Why I'm reading it again is 50 million is the cost of new plant. 45 million, what did they say in the second one? The plant is depreciated 20% per annum. Okay, new plant. Okay, so this is the new plant, and we already had this plant, of 45, right? And it's cost 150. So 20% we will take of this plant. So 30 will be our depreciation, and then of this 50, so this 50 is the new plant. Okay. And there is already an existing plant. Okay. So they're talking how much is the depreciation. So existing plant, or yeah, so the existing plant is, its value is like 150 before this thing, because on this amount only we will calculate 20% of this thing. So this will be for full year. However, this will be for half year only because it is just 6 months. Okay. So we'll divide by 2. Sorry. Just for 6 months, we'll divide by 2. So this 5 and 30, 30 on the existing plant, and this is the new plant. So on this new plant, we will take this 5. So our depreciation will be how much? Because they are asking just the depreciation. The depreciation will be 5 on the new plant for 6 months and 30 for the full year at the rate of 20%. So 35 will be our answer. So fourth one will be the answer. 69th. Having revalued its property, a company is required to make certain disclosures. Okay. So what we need to disclose, what we don't need to disclose, there are four things: effective date of revaluation, professional qualifications of the valuer, the basis used to revalue the assets, the carrying amount of assets if no revaluation had taken place. So everything is required, just the professional qualification is not required. There is no requirement to disclose the professional qualification of the valuer. Everything else is required. The effective date of revaluation is required. The effective date is required of revaluation. Professional qualification is not required. What else is required? Basis used to revalue the assets. This is required, and then the carrying amount of assets. Carrying amount of assets if no revaluation had taken place. Okay, so these three things are required. Professional qualification of the valuer is not required. 70th, 70th. What is the amount of the impairment loss on the license? Okay, how much is the uh, impairment loss? So we need the facts. On what? On what? What is the impairment loss on the license? Okay. So what are the facts we gathered about license? So they have this thing. Let me copy this thing here. I will cut this. Okay. I will delete plant and everything else. So this license they had cost of 300 and the accumulated amortization is 30 and then carrying amount was this and this data was at which date? It was on 1st October 18. Okay. So this is 1st October 18. What else they provided about this license? The facts. Revaluation, land, building, not talking about license, plant depreciated. Yeah. So on 30th September 19, okay, let me bring this thing also here. Okay, so what they said on 1st October 17, this was bought and it is 10-year life and depreciation was SLM. So like 1 year, this thing, then on 30th September 19, we need to first calculate the carrying amount. So how much is the depreciation on 30th September 19 if we take, so cost will be the cost and the carrying amount is 270. So the depreciation will cost, let's leave this cost here. So this is going to be the same, because 10% every year, 10 years life, so 10% every year. So 30 will be the amortization for this year also. The value will be 240. Okay. And now they are saying that 100 million, it has come down to 100 million. That's what they are saying, that it has come down to 100 million. So how much is the impairment? 240 minus 100. Okay, 140 million will be the impairment. So second one will be our answer. Okay. Now question number 71. A company's license is now carried at its recoverable amount. Yeah. Complete the statement using the options provided. The recoverable amount of an asset, recoverable amount of an asset is the higher of what? Fair value less cost of disposal. What else we take? We take value in use. That we know from the study that these things we take that fair value less cost of disposal and value in use. Whichever is the higher will be the recovery amount. Either the fair value less cost of disposal or what the value in use is. Okay. So we are done with 67 to 71 also. So how we did it is like we gather the information at the first, then one by one we look at these questions, brought these facts, relevant facts back, all very easy. Like question number 67, they asked about the carrying amount of this thing. So we took you know, their value after impairment, what was this thing, and then we calculated the depreciation on building, not on land. On land depreciation will be zero. Then we sum this thing. Carrying amount we got after depreciation 68. They asked about the Depreciation, so existing plant we calculated 30 of this thing, and the new plant it will be for 6 months, some of this. Then on the disclosure, what is required, effective date of revaluation is disclosed, basis used to revalue the assets is disclosed, and the carrying amount of assets if no revaluation had taken place. All these things are required on the disclosure, but we don't need to disclose the professional qualification of the valuer. And question 770, they asked how much was the impairment. So we first took the beginning balance, then we calculated the ending balance, and then we saw okay, it should be 240. Like after impairment, they are saying that it should be 100 only. So then the difference is our impairment. Then they asked what is the recoverable amount of an asset. So it is the higher of fair value less cost of disposal and value in use.